Good morning. Well, commodities continue to bounce back from coronavirus fears, with investors buying the dip, while US equities had a bit of a different night, tracking lower, with most of the losses coming in a sudden midday move, leaving traders and investors scratching their heads as to why US stocks were sold down, while gold continued to receive funds, hitting new multi-year highs, and bonds also came in favour as well. Investors pointed to a Chinese state-run newspaper story that said coronavirus cases spiked in a Beijing hospital. While yesterday, as for our session, we soared to that brand new all-time high as Australia's unemployment rate unexpectedly rose, meaning the RBA is now more likely to cut rates. We saw the ASX 200 lift 0.2% or 18 points, closing at 7,163 points. And currently at the minute, the futures are suggesting a flat start, which means we'll search for direction at the open. But with plenty of companies reporting today, there's lots to sink your teeth into. Ardent Leisure, the holiday park and lifestyle park operator, which runs a lot of the theme parks, is expected to report a half-year net loss of $13.6 million. We've got the stock as a buy, flagging the stock will have a comeback. Inghams Group also reporting first half 2020 net profit after tax. We're expecting $42.7 million for their profit. We've also got the stock as a buy, really, as chicken continues to be the cheapest of the proteins. Mayne Pharma, half-year net profit after tax expected to come in at $22 million. The lithium giant, which is based in Argentina or South America, is expected to report a half-year net loss of $5.9 million. We've got the stock as a buy, saying that the stock should bounce back and the commodity itself should hit a low mid-year and then should see a recovery on the back of electric vehicle demand. Platinum Asset Management, Rural Funds Group, Senex Energy and Charter Hall also report. Quickly, just taking you through the markets overseas. As we mentioned, Wall Street was lower overnight. We saw the Dow and the S&P 500 lose about 0.4%. The Nasdaq was down the most, 0.7%, particularly as they have the most to lose given their bullish run this year and last year as well. European markets also lower. The German DAX was down the most, 0.9%, while the broader Stocks 600 was down 0.9%. Asian markets were mixed, and for a good reason. We saw China's Shanghai comp rise 1.8% as the Chinese bank slashed lending rates, while Japan's Nikkei gained 0.3%. Hong Kong's Hang Seng did go the other way, falling slightly. Gold has set a new 5-year high, hitting $1,622.70 as an ounce, as investors really hedge their portfolios. Oil has continued to gain. It's now at $53.77 a barrel, extending its bounce back. The iron ore price is steady at $85.70 a tonne, holding late January highs, and the Australian dollar is now at a 5-year low, 66.14 US cents after yesterday's weak unemployment data. Have a great day, happy trading, and I look forward to seeing you in our weekly wrap.